15, yes, 15 stocks to buy that are down 60% plus. That's what we're getting into in this video, guys. Yes, there's a lot of stocks that are devastated out there right now. Let me cover something off the top before we get into these 15 stocks, and I'm just going to share my perspective on these particular 15 stocks for a minute or two on each stock. So essentially, in this sort of market, a lot of folks view it as you can't talk positively about stocks. You can't talk about stocks you're buying or things like that because we're in a correction right now in the market, and some of these markets are in bear market. The Russell's in a bear market right now. NASDAQ, if NASDAQ has like one more bad day, we're going to be in a bear market for the NASDAQ essentially. And to that, I would say, if you can't buy stocks in this sort of market, when you're in a correction market or a bear market, you can't buy stocks in any market. These are the exact opportunities you get in the market. And there's always, okay, when you're in a correction, when you're in a crash, when you're in a bear market, whatever you want to call it, every single time you get into one of these markets, there's a million reasons why you shouldn't buy stocks, essentially. Every single time. I've been doing this for 14 years, and every single time, I've been through 2 stock market crashes now, 08, 09, and then the 2020 crash. I've been through several stock market corrections, and every single time, there was a lot of reasons why you shouldn't buy stocks during that time. That's why you get into a correction, a bear market, a crash in that scenario, right? And I can tell you, if you can't do it in this sort of market, you don't belong in the stock market, because these are the exact markets where you see a tremendous amount of opportunity. And I will say right now, in this market, I see the most opportunity I have seen since December of 2018. And believe it or not, I even see more opportunity right now in this market. And so if you can't be a buyer of stocks over the next 3 to 6 months, you're probably just not cut out for the market. These are the sorts of times you got to take these sorts of opportunities, and they're presented to you, every few years. Let's put it that way, okay? If you want some free stocks from Moomoo, while they're still giving out free stocks over there, the professional trading platform, check out my pinned comment down there. Even right now, basically with a $100 deposit, they're also giving you a free TTCF share. And make sure to subscribe to the channel if you're not already subscribed. It's absolutely free to do so. Hope you enjoy this video as always, and I hope you enjoy the positivity and talking about some stocks that are great deals. It's very easy to just talk about, everything's crashing right now and things like that. I hope you guys appreciate the positive perspective and me sharing my opinion on stocks that I think are a great deal. So first one of these 15 stocks up here is this one, BYND, Beyond Meat. So actually, this is a crazy one because they're reporting earnings within the next 24 hours. This is a buy before the earnings. This is a buy after the earnings, regardless if the stock goes up, down, all around. It literally doesn't matter. This one is a buy right now. And essentially why Beyond Meat is a buy, and regardless if it goes up on earnings, down on earnings, anything like that, is there's something very freakish is about to happen for this company. That doesn't happen very often. They're about to have a reacceleration of growth, which you very rarely see. Like, most of the time what happens is a company's growth rate goes down year after year after year. And so to see a reacceleration of growth is a very unnatural thing, okay? Not only that, but to see a massive reacceleration of growth is even more of a rare thing. And so that's what Beyond Meat has happened to it in 22. And I can tell you almost every single time I've ever tracked a stock or owned a stock that had a massive reacceleration of growth, in that given year, the stock price went up massively because it does not happen very often, okay? Also, this company is expected to lose less money. They got the massive McDonald's deal and a lot of other deals, essentially KFC. And remember, when you get all this advertisement for Beyond Meat out there, essentially it makes a lot more people consider eating plant-based products. And who's one of the biggest players in that market? It's Beyond Meat. And so I would expect their grocery store sales to be very, very strong in 22 as well, and into 23 and future years. So yeah, this is a very exciting stock. I think it's a great buy across the board right now. And like I said, regardless if they fall or they go up on earnings, literally it's a huge buying opportunity, in my opinion, for Beyond Meat. I think it sets up really well in the short term and for the long term for Beyond Meat, okay? That's first stock of these 15. Next stock up here, number 2 of 15, is Palantir. Another stock down 60% plus. So in regards to Palantir, right? A very consistent business model. They should grow, 30%, around 30% year after year. Alex Karp's gone on record saying they're expected to grow through 2025, 30% per year on average. And so this is a business model that is at the cross sections of artificial intelligence and data. And if you're a big company, you have to consider using Palantir. And even for a lot of mid-size, I think you got to consider using Palantir. You got to really give them serious thought. Like if I'm running a mid or even a large company, I've got to at least consider using Palantir. I've got to call them in for some presentations. And I've really gone down the rabbit hole. Like almost every single night right now, I'm spending basically doing mad research in Palantir and trying to understand the product they have on the highest level possible. And the more research I do into this, the more I'm like, I think it's almost impossible if you're a big company or midsize not to at least consider using Palantir. And their business model should be extremely sticky over the coming years. It's going to give them pricing power, and I think that their profitability is going to go crazy starting in a few years from now. And the reason it is one, they're building out their sales team. They're adding a lot of cost to the business model right now, right? But it's just about acquiring customers and then getting those customers to use your product year after year after year. That's where the real profitability happens, essentially. Engineering talent, I see them still, having a ramp up in engineering for the next 1 to 2 years, but I don't see them having to continue to have a ramp up in engineers. I see them just kind of like needing a certain amount of engineers and it kind of being that over time. So I think that's going to end up moderating the share-based compensation, which is a huge concern. That's sticking around for the next 1 to 2 years, but everybody knows that now. And so as that falls off, I think it's just a tremendous opportunity. You got Kathy Wood, basically, she's dumped, almost all of her shares in Palantir. Stock's trading at $10.22 as a long-term opportunity. I think this is a great long-term opportunity. And if it gets any more sell-offs to the 8, 9 range, 7 range, anything like that, I think it's just a huge buy. Market cap right now is around $20 billion. If it drops under 20 billion, in my opinion, as a long-term, company, just a huge opportunity in this one. Probably going to be a stock I'm going to build into a major position over the next 6 months, especially if it's trading anywhere remotely close to here or under where it's trading at right now. Okay, that's number 2 of 15. These stocks down 60% plus that I think are a buy. Next one, number 3. PayPal Holdings, PYPL. And I tried to add in this list, all these stocks are down 60% plus, but I try to add some really profitable companies, some money-losing companies, some companies that have just barely started to reach profitability. This is one of the stocks on this list that is a massive profit machine and cash flow machine. Now, in 23, they're expected to have a huge ramp up in EPS, essentially. This year is supposed to be kind of a moderation of EPS, 466 analysts expect from 460. Now, it's something important to remind yourself of is the expectations are very, very low for EPS this year. Revenue growth expected to be 15.8%. Yeah, I'm expecting anywhere from 15 to 20% revenue growth for PayPal. And remember, PayPal owns not only PayPal, but they also own Venmo, which Venmo has this huge deal coming with Amazon this year, essentially, that I think that is going to be a way bigger opportunity than I think Wall Street's even expecting. I think the branding that gives Venmo too is huge, and PayPal and Venmo are usually consistently around the number 2 and the number 3 most popular apps in the entire finance category out there on iOS and Android. And so that's a huge opportunity for the company. I love that. Expect to have a reacceleration of growth for this company in 23 as well. And this is a stock that was $300 just a few months ago. So it's gotten devastated. The eBay fall off, so essentially eBay and them broke up many years ago. But in terms of kind of the final unlinking of this business, it's happened over the past year. And essentially what the CEO has said is after next quarter, there's no more major effect from that eBay fall off, which is going to help them comp quarter after quarter after quarter, which is part of the reacceleration of growth. And the wild card there is how big is that Venmo and Amazon deal? I think that's a big wild card there, okay? So yeah, PayPal's got to be one of those stocks in this 15 list that's just a massive buying opportunity. Number 4, 15 of these 15 stocks that's a huge buy now, down 60% plus, is The Chef. You knew this one was going to be on there. There's no way I was going to do this list and not mention The Chef. The Chef's, this is a crazy year for The Chef, essentially, okay? Now, 30+% revenue growth expected in 22. I think they'll hit that easily based upon the store expansion, the SKU expansion, new product categories. Oh my gosh, okay? It's ridiculous. If you track this company on a high level, you know the opportunity there. Now, in regards to Chef, they're expected to get much closer to profitability in 22. I don't think they're going to get profitable in 22, but they're going to get much closer to profitability in 22, which sets them up in a situation where it's like, could this company go profitable in 23? I think they're at least going to have some profitable quarters in 23, which is a major thing. But when it comes to Chef, the biggest thing for Chef this year is this is a year where they get on Wall Street's radar, in my opinion. Their revenues are going to start to, scale to several $100 million. And, this is one of those brands that you're going to just start seeing at every single grocery store out there, and it's going to be impossible to ignore them. And when you see their growth rates and then getting close to profitability, I think this is a company that this is a year where they get on Wall Street's radar. And so I love this year for Tattoo Chef. I think it's going to be a tremendous year. Any sorts of major dips in the stock, I'm going to be a buyer of. I'm also looking at 2024 call options in regards to Chef. Now, when I talk about the Chef, there's another stock that's going to automatically be thought about because I've been buying both these stocks. Corsair Gaming, right? So Corsair Gaming couldn't be on this list essentially because it's not down 60%. So although I believe a ton in Corsair Gaming over the next several years, and I think this is a huge buy, it couldn't be on this list. This is a list of, you got to be down at least 60% plus, and Corsair Gaming is not. So that's why that one couldn't be on. I just wanted to reference that because I know I'd get questions about that one, okay? Next one up here, number 5 of 15, Fubo TV, ticker symbol FUBO on this one, okay? So when it comes to Fubo, however you want to pronounce it, this one expected to have 75% revenue growth in 22. Expect to still be a big money loser, and in this sort of market, the market doesn't like any money losers. I mean, the market doesn't like basically about anything right now. This is a very, very stubborn market. It's kind of like trying to lose belly fat, right? You losing belly fat's a tough thing to do, especially as you get older. But, you know, that's the sort of market we're in right now. But, man, if I look at a company that looks pretty darn attractive, this company is market cap. This company's market cap, right, is just over $1 billion. Just over $1 billion market cap. The stock's trading at $7.32 right now. Come on, you gotta be flipping my flapjack. Basically, this company's trading at a forward price to sales ratio of just over 1 now. I think it's a huge acquisition target. I wouldn't be surprised if Disney doesn't try to make a move here, especially if the stock still remains low. I don't think they should sell. I think they should continue to do their dang thing. But yeah, that one's a huge opportunity. Number 6 of 15 stocks down 60% plus is Block. Square stock. Yes, in terms of this one, expectations extremely low for Square. Extremely low expectations. And remember, Square doesn't just have their traditional business, but they're working on a ton of stuff when it comes to blockchain technology. They own the number 1 app in the finance category pretty consistently, which is Cash App. So, Cash App and, PayPal, which owns PayPal and Venmo, those three basically have almost like a little monopoly on being the biggest of the bigs out there. And so I look at this one as another one of those that just, expectations extremely low, stock beaten down to the floor. And I think this is a huge buying opportunity, not just now, but over the next several months in a stock like Square. When you think about this is kind of a visionary type company in the fintech space. And I don't see them not having a much more successful business 3 years from now, 5 years from now, 10 years from now than they do today. Seems like they're in a really, really good position, all right? So yeah, Square is number 6 of 15 of these stocks, down 60% plus. Next one up here, number 7, is Shopify. Yeah, who would have thunk it? Shopify, down massively. So Shopify EPS expect to go down this year. That's part of the reason I think, the stock's down so heavily. Expect to have a reacceleration of EPS growth in essentially 23, and expect to have a reacceleration of revenue growth in 23, coming off a lot of tough comps, right? Shopify, one of the very few businesses that, if I look a decade out, one of the very few companies that I could actually see being part of the $1 trillion boys club, as they call it, right? And this one, when I just look at their business model, everything they're doing, innovative company just continues to get bigger and bigger and bigger. And one of those that feels like just kind of like a buy stock, put in the filing cabinet and continue to buy shares over the course of this year and just put them in the filing cabinet and see what happens over the coming years. They're the closest thing to Amazon I think the stock market has seen in that space. And I see them just getting bigger and bigger and bigger over the coming years and just building out into a cash flow machine, a profit machine, and continue to build a beast business model in several different fronts there, okay? Number 7 of 15. What about number 8 of 15? Well, Honest Corporation, HNST. So, Honest, they make basic necessities like diapers, baby wipes, makeup products, beauty products, soaps, shampoos, things like that, okay? And when it comes to Honest, they're continuing to innovate at this company. The company has continued to get more and more retailers, get more and more SKU expansion, which means more and more new items into stores, essentially, because they sell really darn well. And so basically 22, they're expected to not be profitable, but they're expected to get very, very darn close to profitability. And I'm not going to predict profitability for this company, but I think they're going to get a lot closer than a lot of folks expect for this company. Keep in mind, the most bullish analyst has them only losing 1 cent a share in 22. And I think this company will be profitable in 23. And I think there's going to be a lot of Wall Street that wants to get into this stock prior to them getting profitable. Now, revenue growth wise, double digits expected in 22 for this company. And I see them hitting that easily based upon sell-through, based upon SKU expansion, and based upon likely price increases because inflation. I don't know if you guys have heard about this inflation thing. So I think Honest is in a great spot. It's honestly probably, no pun intended, this is probably my favorite stock in the stock market right now, risk reward wise. I can't think of a stock I think is a more attractive risk reward right now in the stock market for the next 2 to 3 years than Honest. They are my favorite out of everybody right now. Stock's $5. Number 9 of 15 of these stocks down 60% plus. That's a buy right now. Is Oatley, Otly. This company is expected to have over 50% revenue growth in 22. They make oat milk. They make a ton of other products that are basically disrupting the dairy category right now, right? They make oat milk based ice cream, which is a phenomenal, amazing products. Oat milk type yogurt products. I mean, so many different. They're disrupting the dairy category right now. Yes, they are a money loser, but at the end of the day, this is going to be a huge profit machine, a company with growth. You know, the thing you got to understand is food and drink companies don't come across that often that have massive growth over the next 5 to 10 years. And what you're going to see with companies like Tattooed Chef, TTCF, and Oatley, I'm telling you guys, there's very few opportunities you ever get in the stock market for food and drink companies that are truly disruptive, that have crazy growth over the coming years. Oatley is one of those companies, and this is a company that, you know, I was a huge cow milk drinker, and just to tell you this little story real quick here, is I shifted to Oatley over the past few months, and we went from a situation where I didn't spend any money at all with Oatley to now we spend, you know, $30 to $50 a week every single week with Oatley. Imagine how many families are going to switch to oat milk from cow milk over the next several years. You know, and this isn't like, this is just like, it's a 2-year, 3-year horizon. This is going to happen over the next decade. And more are going to switch, and all of a sudden Oatley is going to go from no one bought their product to all of a sudden, you know, people are spending $20, $30, $40, $50 a week on their products. They have a superior product in the market. I've tried everything out there, and anybody that knows anything about this category knows Oatley has a superior product. Will there be other brands that are successful in this category, right? In terms of like, you know, people buy them if they want to undercut price. Sure, absolutely. But Oatley will always be the category leader, in my opinion. I haven't seen anything that's going to beat them out. And this category's got so much expansion. It's ridiculous. And never mind the SKU expansion. Their branding is genius. How many products they're going to get into over the coming years? I think this is the most exciting drink-related company since, and they're not just going to be drink. They could be food over time as well. But the most exciting drink-related company I've seen since Monster, which you know, was a, you know, look at the stock chart of Monster over the past 20 years. This is the most exciting thing since then, and I would argue that this one's even more exciting than Monster, which is saying a lot. Okay, that's number 9 of 15 of these stocks down 60% plus. That's a huge buy here. The Planet, Jack Jackson play, massive store expansion over the coming years. Their stores do crazy volume. They're the Disneyland of their space. New products all over the place, and when it comes to their owned brands, that opportunity for this company is ridiculous over the next several years. This is another one of those companies, and you're going to notice a trend of most of these companies. It's not like these companies just have like something that's going positive for them over the next 1 to 2 years. The thing with all these companies that are on this list is they have crazy growth over the next 5, 10, 15 years. It's not like it's like, oh, they got something exciting going for, because that's the kind of hack in the stock market, is you don't want to just be in stocks that have like something positive going for them over the next 1 to 2 years, because then everybody's looking at it and they're like, well, yeah, that thing's going for them over the next year, but then it's going to flip. Such as a lot of people were trying to get in Rocket stock over the past year or two. I never got in that stock, and I viewed that as a kind of a bad stock, because they were going to make crazy money on mortgages and refinances in the short term, but essentially that stock was set up that no one wanted to buy it because we knew that was unsustainable, right? And now all of a sudden you see refinances and mortgages coming way down, and guess what? Rocket stock didn't do anything during that boom time, and now they're going to be in kind of a, I don't want to call it a bust time, but a tough position over the next couple of years. Rocket could be actually an attractive stock in 23 and beyond, but nonetheless, you know, I didn't want to get too off subject, but 50% plus revenue growth expected for the Planet. This is one of those companies that's going to build into a cash flow machine, a profit machine with crazy revenue growth. And when federal legalization comes for this category, if you want to talk about one of the stocks that's in the best position to thrive, it is the Planet. Wait to see, you know, the numbers of the Vegas store does this summer. The OC store does this summer. Oh my gosh, okay. That one's exciting. Number 11 of 15 up here is TDoc, Teladoc, huge player in obviously, you know, this is called virtual healthcare, which is just a space that's going to continue to get bigger and bigger. This stock went to $300 plus last year. And It's at 60 today, huge opportunity. There's a money loser, but the thing I think folks got to understand is the losses are coming way down from $5 plus to $3 to $1 something. And I think this business will probably flip to profitability in 2024. And this business is going to be an extremely profitable business, in my opinion, over the coming years. Now, revenue growth, huge deceleration from 88% to 24%. I think we should all expect that. But at the end of the day, 24% revenue growth expected is still very, very strong. This is one of those businesses that I think can grow 15 to 25% a year, every year for like as far out as the eye can see. So Teladoc's in a really great spot, in my opinion. Part of their crazy growth was not just Rona, but the Livongo acquisition that they did a little over a year ago. So yeah, and nonetheless, it's a huge opportunity in mental health, but also physical health as well, and just going to become a company that's going to get bigger and bigger and bigger over the coming years, in my opinion, and become a household name in the healthcare space over the next 5 years. I still think Teladoc is honestly, I think they're still kind of niche from what they're going to be in 5 years from now, when I think almost everybody's going to be aware of Teladoc or Livongo. So that's number 11 of 15. Number 12 of 15 up here is a Boston Beer Company. Number Sam on this one. $368, $367 after hours. This one, it was a horrible year for them in 21. They got way too bullish on the hard seltzer category, had to take some huge write-downs. They're going to get their business back in the right place in 22, and think about all the bars and clubs and all the stuff opening back up, sporting events, a huge opportunity for Sam to capture market share. Think about all the social events that haven't been going on over the last few years. Yes, all these things opening back up, the world getting back to normal is a very bullish thing for Sam. I can tell you it's a very, very bullish thing, okay? $17 to $18 expected EPS in 23, 10% revenue growth expected for this company in 22, 7%. This is going to get back to consistent growth, in my opinion, in a profit machine. I think Sam's in a great position over the coming years with the world getting back to normal, okay? It's number 12 of 15, number 13 of 15. These stocks down 60% plus. That I think is a huge buy. Real. So think about it. If you want to buy a high-end purse, handbag, clothes of some kind, some high heels, and you don't want to buy them brand new, right? You can get a discount on Real, and qualified merchandise that is real. That's why it's called Real. $1.14 loss expected for this company in 22. But the revenue growth is opportunity for this company over the next several years is massive. I think this is another acquisition candidate. I think eBay should make a bid for them. I think there's a lot of companies. I think Revolve, which RVLV is a stock I personally own, I think they should make a bid for Real. I think it's a great tuck-in acquisition candidate. But I think regardless, I think the stock's in a really good spot over the next few years, in my opinion, when it comes to Real. So that's why it's number 13 of 15 stocks up here. Number 14 of 15 is Stitch Fix, another clothing-related company that basically sends you merchandise that use artificial intelligence as well as humans to decide what clothes you might like. Now, they started up an international business recently in a kids business, and that's caused them to, potentially lose more money over the next few years, which once again, in this sort of market, the market hates any money losers, right? And the market hates basically every stock. But Stitch Fix, I see as being in, this stock's got beaten down too far, in my opinion. I can understand it getting beaten down to $20 or so, but $11 is pushing it. That's pushing it for Stitch Fix. I've tried out their product. I like their service. I think this one's a nice opportunity here at $11. That one's just been hammered, okay? Last stock up here, number 15 is 15 stocks. Hope you guys have enjoyed this video going over all these different stocks that are down 60% plus, I think, are buys. Purple, PRPL. This company makes mattress and bedding products. It's $5 here today. Expect to get to profitability in 22, which is a huge thing, especially in this market. So as they start hitting profitable quarters, I think that's massive for this company. US-based company. 12% revenue growth expected for this company in 22, and the stock's just gotten beaten down way too much. I mean, this is under a 1 price to sales ratio now. They own their own brand, which I think is big. And Purple, I love it. I actually love this one. I don't personally own it, but I could very much own it very, very shortly, okay? Woo! That was a beast, guys. Hope you enjoyed this. As always, if you would like basically the markets and the crypto and the business news sent to your inbox every weekday, absolutely for free. The Hungry Bowl, I got a team that basically writes a daily newsletter. And if you want to subscribe to that, check out pinned comment. Don't forget to get your free stocks from Moomoo as well and subscribe to the channel. Much love. Hope you enjoyed this and have a great day.